Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
How's it going, everybody? Welcome to the Black and White Market Minute with Smart Money Group. We have Aaron, Sam, and Tanner, and myself, Kade, today. How are y'all doing?
Doing good.
Doing great. Doing great.
Good week. Getting ready for Christmas. Cannot
yeah.
believe it's already that time again.
Yes.
Flown by.
Well, what's going on, Aaron? What did you want to talk about today?
Well, it's not bad stuff. I'm pretty dang excited of what the market's looking like next year, and kind of wanted to talk about that and kind of go over some things that don't want to say fearful, but things that could hurt that idea. Most of the time, all we do is sit here and talk about risk and risk and risk, and I want to step away from that for just a split second. Nobody tell my mom or anything, but have some fun, talk about the good stuff, and move forward.
For sure.
You know, this year has been an incredible year. Absolutely incredible. We've gotten a little bit of everything, huge drops, huge gains, nothingness. If this was your first year in the market and you stayed in, congratulations. You got to experience it all. Kind of where we're at now is a lull. You know, the market's just pretty much flattened out and not doing much of anything. This week included, I think, let's see, where is that? The market's right at flat, down 0.11%, and everything else is following that. So very, very boring week. I kind of like those because that's really where quality tends to stand out when nothing else is working. People kind of just decide not to do anything or just buy high-quality companies, and that's kind of what we're seeing right now. But if you think about it, there's been so much risk since the correction. When was that? Early April. You know, we came back from that, and nothing's really happened. I don't think that's the case next year. I think we have a great chance of having a good market. But it's going to be a different market. It's going to be a market that we have not seen in a long time. We have talked about this quite a bit, but our economy's been struggling. Consumers been struggling. There's big words going around right now talking about the K recovery. Basically, your average consumer or your average American is struggling. You know, inflation's kind of kicking them. If you're in the cereal aisle, instead of buying Captain Crunch, you know, more than likely you're going to do the equivalent at Great Value or something like that. It's just been difficult. And this isn't the first year. It's not the second. This has been going on for quite a while. I think it would be a lot more easy to see if COVID hadn't been in the way. You know, COVID, yeah, that was painful, but the recovery off of that skewed a lot of things. But that's where our inflation really came in, and it changed the consumer's behavior. I think if you look back that far, there's no chance that you could think anything different. So I think that's going to change. I think this consumer starts to come back. Just from a jobs preview, we had most of our job growth was coming from the U.S. government. And, you know, just like any other government funding, it's never the most productive. You know, there's not a lot getting built. There's not a lot of anything. They're just spending money to spend money. And that's flip-flop now. You know, it was, what was the Elon Musk deal called? Was it Doge?
Yep. Mm-hmm. Department of Government Efficiency.
Yes. That was one of the big things that he came in and cleaned up, and we're finally starting to see some job growth on the private side, which is awesome. That's what we needed. It wasn't too painful. The market didn't give up a whole lot, but our job market is going to start going the other way. And once we get into more of the private jobs, you have a better chance of doing really well for your company and getting raises, getting bonuses. If the company's doing good, it's very much more likely that they are going to pay you more if the company benefits from it. So I think that's a big thing. Money. Money is changing big. It wasn't maybe 3 weeks ago, 4 weeks ago, the Fed was still pulling money out of the market. We still had reverse repos. The Fed was slowing down the market, period, or slowing down the economy. That's 100% reversed. We have regular repurchase agreements, so we're putting more money in the banks, and QE's fixing to start happening. We've had, if you think about it, help me out here, since 2022, 21, the government's kind of changed the way that they were doing things. They've been funding the government off of super short-term debt. So all the treasuries that they were buying, they were just buying the highest yield ones and letting the long-term debt kind of mature. They held on to that idea until basically the economy dried up. And it's kind of funny how it happened. I might have to be corrected here, but I believe J.P. Morgan had a bunch of money at the Fed. And like when I'm talking a bunch of money, I'm talking 450 billion, 600 billion, something like that. They took a draw on that. They took 2/3 of it out, like 400 billion, and Fed didn't have any money anymore. So QE started. And if we're going through history, boy, that was super successful for investors through all the teens. When you're flooding the market with money, I don't want to say good things. Let's just say market prices tend to go up quite a bit. So that's going to be a big tailwind. I don't know how to say this the easiest way, but Powell and Trump are probably not sending each other Christmas cards right now. Let's just say they've had disagreements for a long time. And the easiest way to put it in perspective is Trump is a real estate guy. So the lower interest that's being charged or the smaller mortgage he's going to have, the more money he makes in his real estate business. He's lived it. He's gone through the ups and the downs, and he knows when he was the most successful, and that's when interest rates were lower. So he's seeing the economy and saying, hey, things aren't near as rosy as they all look. Let's get this market going and lower interest rates. What did he say earlier? He gave a percent, didn't he, earlier this week?
Yeah, I didn't listen to that whole thing.
I think he said he wanted it down to 1%. So
Well, and if you think about it too, his incentive from a government expenditure standpoint, one of the main concerns or the red flags that gets brought up all the time is the current deficit. Well, if interest rates go down, interest expense is going to go down, the deficit's going to shrink, and that they didn't have to cut any spending in order to get that done.
Amen to that. That probably is one of the most devastating things out there. Our interest expense is greater than our defense expense right now. So I don't think you're very responsible if that's how you're managing rates, but it is what it is. We need lower interest rates, and that helps our deficit quite a bit. What's another thing? Oil. We just hit, a 5-year low in the 50s. Oil to the rest of the country is the same as interest rates are to Trump's real estate business. You know, if it costs more to fill up your truck, guess what? Shipping's going to cost more. If you're going to the coast for a family vacation and gasoline costs twice as much, guess what? You know, you're not going out to eat as much. It definitely slows things down. So I'm not saying that the market's going to recover because oil is low, but I am going to say that it's going to be easier for the economy to recover with lower oil.
It opens the market for more money, like you said, to go towards everything else. That kind of spurs other movements.
Yes.
So
Amen.
that's really, yeah.
You know, we're right there on the edge of West Texas, big oil. So we do good. From a local economy, the higher oil is. And, you know, we're just a hop, skip, and jump away from Midland, Odessa. Big oil there. So, not going to say that it directly helps or hurts us, but you can feel it. You can see it on people's face when oil is higher. So, it's not all roses, but it is going to help quite a bit. One of the other things that is starting to be recognized, is some of the markets moving that hasn't been the Mag 7. You know, Mag 7's been the only story in town, and our equal weight indice, RSP, that's been moving. That's starting to have really good pricing action compared to the S&P 500. And the reason that's important is we need the rest of the economy to catch up. We need the rest of the stock market to catch up. Sam follows trucking, and our largest trucking company, Old Dominion, that has bounced huge. Now, we buy things because we want to own these companies for the rest of our lives. But when it comes to just a stock, we do look at pricing action. You know, if that stock is going up, we know people are buying it. So if people are starting to see a recovery in our economy, more things are going to be shipped. There's going to be more traffic on the interstate, and people want to get ready for it. And it looks like Old Dominion is finally getting a little bit of help on that push. So good to see everybody playing the game right now. I think for quite a while and well into the future, our technology landscape is not changing. Our world is changing at such a fast pace, and that is being led by technology. There's some cool stuff that came out on one of Elon's companies that they are going to try to start putting those data centers in space.
Which isn't as far-fetched as we really think it is.
No, not at all. No. You'd have been laughed out of here 5 years ago.
Yeah, people have they're starting to realize that Elon actually has the amount of power to do something like that.
Yes. I think I like the way you put that. If you really think about it, Elon accomplishes whatever he dreams. You look at the driverless vehicle, you look at Tesla as a whole, you look at SpaceX. If he dreams it, it comes out. Not to say it's going to be a great company or anything like that, but he is an amazing individual that is changing the world. What are some other things that you're excited about?
Well, you know, I think that the market has some good momentum to it, and I think that part of that is the buy the dip mentality. I mean, especially since 2008, whenever the government stepped in the middle of the great financial crisis, and then you had all the stimulus and COVID, and then it seems like, especially some of the smaller investors or retail traders, every time they get an opportunity to buy the dip, they pile in, and it starts supporting those hard days where you see a lot of those red numbers. They're not as long lasting as they used to be, it seems, and part of that's the federal government being willing historically to step in, and the other part of that's people believing that the government's willing to step in order to make sure the economy stays churning. So it's really one of those situations where you never know if the dip is going to continue or if everybody's going to buy the dip, and if they don't, at what point does the government step in and start that stimulus? Just like you said, they're
Yes.
starting that all over again. So
That's incredible. Absolutely incredible that we should even be thinking this way. But they've stepped in, they've helped over and over again. What do they call that? The Fed put.
Yep.
So buy the dips. It's been great. One of the other things, tariffs. How big a news was that? How scared were everybody on tariffs? What are you hearing about it now? Nothing.
deals being made because of it. That's about it.
Yes.
I think there were 9 pharmaceutical companies made a deal today with Trump in order to avoid the tariffs.
Yep.
Awesome.
Doing whatever they can.
But in the short term, if I'm scared, if I have a lot of stuff I need to buy from Japan or Vietnam, and I'm worried about tariffs, I'm probably not going to make as big of an order as I needed to. I may try to keep my inventory more in check because fear, that was overblown. We know it did not have the effects that we were told. So maybe next year's the year that inventory levels get back to normal. People make the purchases that they need to make, and that fear just disappears.
Yep.
Well, and think about this too. We had the big, beautiful bill with taxes, which will kind of start playing as we go into the new year, and some of those will, because there's not as much taxation on tips and whatnot, and some of those other rules and other deductions that are added in there, you're going to have more spending money come tax time. It's going to open, like we were talking about, it's going to free up more income to spend into the market, which is probably part of the big, beautiful bill. So to
Yes.
your point, there's a lot of opportunity next year, like you said, with inventories regulating, more money possibly from the big, beautiful bill as we get refunds. The market is as prosperous as you want to make it next year.
Well, you should have started. You should have done this speech.
Wow.
I like that.
And speaking of tariffs, I mean, there's still that outstanding case that's expected to be resolved in the next 6-12 months, where I don't think it's a super high or a super low possibility that they reverse some of those tariffs. Now, the kind of mess that's going to cause politically, I can't imagine.
Oh my
But
gosh.
think about the negative effects that the market had at the announcement of the tariffs. Invert that to the positive effects of those tariffs being removed if that happens. I mean, it's just going to be, talk about a put. It's going to be driving everything higher.
That's actually fun to think about. What is going to come out in the media? How's it going to be defended, one way or the other?
And what are people going to say about it? That's
Yeah.
just how media is, and then you're going to wait a few months, and like you said, it's just going to kind of disappear, and we're on to the next thing.
Yep.
And, it's that's it.
Trump was thinking about giving everybody a dividend off of these tariffs, pay the public the savings or the income that they've received. So have y'all thought about what kind of landmine that could be? If you've promised everybody $2,000 and a political party comes in and puts an end to that. Because for a lot of people, that's already spent.
Mm-hmm.
Right.
So that could be a very large landmine.
Well, I think that could be a political strategy similar to the New York mayor, where he comes out with all these outrageous kind of announcements of what we're going to do, and then to a degree he relies on the counterparty to foil his plans so that he can blame them for it. And so I think that could be just a political
Just setting
game.
people up
Yeah.
left and right.
You know what? Speaking of that, we're going to get off topic for a second. I 100% believe that was what happened with Epstein. 100%. We were doing some 4D chess, not we, but put it into it for long enough that it's a necessity for all parties to bring that up. And voila. Today was the deadline, wasn't it?
Yeah, but I read something that they weren't going to be able to release all of it, but there was going to be a limited release.
Yeah, okay. Okay, sorry. Can't remember, I think I was talking about that the other day with somebody.
That's the late night podcast. That's a whole different
yeah, yeah.
podcast.
Couple hours.
Y'all don't
Another
want me on
big
that one.
one was, Sam already brought it up, but reshoring. You know, a lot of industries, because of tariffs or national security, are coming back on shore. You know, and these are good jobs. These are big companies and great jobs. So if we have Americans with great jobs, that means they're going to spend more money, and our economy is going to do well.
Well, and it's so circular too, because you kind of missed a piece of that. If you put more money into the companies, those companies grow, which allows them to either pay more or get more jobs. It increases more jobs. It is so much more circular than people get. We're so bad at just
Yes.
kind of tunnel visioning it on the current situation or a few months out or a few months back, that in the long term, like you were saying, things do all kinds of stuff and they work all together. You can't look at just one piece of the machine and think, oh, that's it. That's the whole story, because it's not.
That was put perfectly.
And this has been Wise Words with Kade. Thank you.
But it's we were talking earlier about the market in general and some investment views, and it was the same exact thing. Why we look at stocks in today's prices or this month's prices versus companies and our process over a 30-year time frame or whatever that is. Because once you step back a little bit, then it erases the noise. You know, you can actually see what you've put together and see the full picture. So, very well put. You know, that's all the good stuff I have. Do y'all want to go over fears?
Well, before we get into that, something else, that I've been thinking about for a second is real wages have started to trend upwards. You had 22 where inflation adjusted or real wages dropped, and then they've been flat since then. And so I think they're up nearly 1% this year, which is a big change from 22, 23, and even late 24 it started to move, and it's been doing good this year too. So
That's what we need.
Inflation adjusted wage growth is a big deal in how people feel and if they're willing to spend and how it trickles through.
100%. Bringing the consumer back. Buying your Captain Crunch,
That's right.
So that's exactly right. How do we get above inflation? Anyways, very, very, very positive about next year's market. Now, there's always a bunch of noise. Try to ignore it. Look at the big picture. Don't look at stocks.
I'm probably half the noise that Aaron's hears anyways. So.
Half the noise and none of the hair. You thought I wasn't going to get one in today, but I did.
Took a couple week break, but now you're back.
Hey, yes,
Yeah.
I'm back here with all the great jokes. But I think that's it, guys. So thank y'all so much for tuning in to the Black and White Market Minute on Life Planning 101, and we'll see you next time.
Merry Christmas, guys.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.